As always guys, this is just for entertainment purposes only, this is not financial advice.
Hey guys, and welcome back to my channel. I'm very happy that you're all joining me again, and I want to discuss my dividend portfolio. I have a slight cold, so I hope it will not affect my voice, but welcome back everyone. This here is the status of last month. 1 month ago, if you remember, I just had a disastrous year, 2022. Like all of us, we're all in the same boat, sailing to the promised land. I think I can see it. So here I ended on 2,000 euros negative, with a few stocks really dragging it down, such as Intel. Now the results for this month, end of January, here I saved them. They're looking a lot better. I'm actually slightly positive, so I'm up. Yeah, I think I calculate was almost 10% up. So it's really good. And we can see like really all my stocks have gone up. But the only exception was Nobia. And yeah, Intel, I wouldn't say it went down, but it traded sidelines a little bit. Let's see, let's compare. Yeah, it even went up a little bit, Intel, despite of really bad earnings. But Nobia really went down a lot. They're suffering a lot from the Russia-Ukraine war that's going on there. So yeah, but that's really the only stock. I think all the rest did quite okay, except for maybe the new stocks that I bought, but I'll come back to that. So what did I bought this month? So I bought more AT&S. I'm going to discuss all these 3 stocks I'm naming now in detail, guys, so don't be impatient. I also bought Halyk Bank, it's a Kazachstan bank. I'll explain a bit later why I bought them. And last, Serica Energy. That's a UK-based stock, so I like UK-based because they don't have withholding taxes, so that is always good. I do have to want to make a special mention for CLIQ Digital, who has done extraordinary last year for me, and who's also this year on a really good run. But they also reported fantastically. These guys have great margins, they have a nice dividend, they're growing like crazy. They have opened CLIQ.de, which is a streaming service, but even without a streaming service, they're doing really great. So I'm very happy with them, and I can't wait to see full end year results. Now to my first purchase, Halyk Bank, Kazakhstan bank. You can see the last year this bank has not done so well. I think the fear of the war is baked in way too much there. I think yeah, it's a little bit overrated. I think their PE is currently at 2.5, which is a lot better than any Western bank out there. And I think what the market is underestimating is the amount of Russians right now moving to Canada, not to Canada, moving to Kazakhstan, that are going to park their money at the big banks there. And this is the biggest bank in Kazakhstan. They give a 10% dividend yield, so even after taxes, you still hold a nice dividend, and they might be increasing their dividend at some point. I'm not sure when. I do look at their profit statement. So for the first 3 quarters of the year, they had made 470 in profit. So let's say they make 550 million in profit. So the half of it is normally according to their own dividend portfolio. Here it says payment of dividend of common shares shall be from 50 to 100% total net profit for the reporting year. So I would expect that they would pay out quite a lofty share of dividends, and that would actually make it, if they would follow at least 50%, that would make it a 20% dividend stock. And it's not one of those declining dividend stocks, because you can see how much the profit is gaining. And as I said, it's all to do, in my opinion, with Russians moving massively to Kazakhstan, to Georgia. And yeah, there is the risk of your neighbor, the neighbor risk. There is the risk of revolution. And yeah, let's be honest, it's not as democratic as we know it. That is one way to put it. So Yeah, I have a small position. I'm not going to make a huge position in this, but I might do one more purchase depending of if the stock price is going to keep dropping a little bit further or yeah. Next stock, Serica Energy. You can see it also made a big jump when the oil prices jumped, and now it's a little bit at their all-time, well, at a low since about 1 year. It's back at the January prices, name me one energy stock who's done that. You can see the forward dividend yield, 7%. So why is the stock down so much? Actually, they were doing fantastic. You can see here they had 250 million on their balance sheet, and they are a profit generating machine. Here their last earnings are not even on there, but I think they will end up with 400 million by the end of March. So why is the stock down? Stock is down a lot because they did takeover from Tailwind. To do the takeover, they have to do a pretty big dilution. I think it was around 30%. They have to take over the debt of Tailwind, but in exchange they get like a pretty much doubling of production. They get a diversification. Before they were only gas, now they're gas and oil. And I think with the demand of Russian oil dropping, the demand of Western oil like this could increase. And a 7% dividend, it seems like something, even with the dilution, they should be able to uphold. And with the low withholding taxes, I think they should be able to give out a really nice dividend close to 5%. So that's nice. It's just a good dividend income stock. Of course, we're very dependent here of oil and gas prices, and I would at some point want them to diversify to other types of energy, but now they made the first step to diversify to gas and oil. So that's the first step. Let's see where they will go in the future. Next one, AT&S. So I bought more of this stock. AT&S did a profit warning. You can see here the revenue. The analyst used to say it would be 2.1 billion per year. Now I say it's 1.8, 1.9 in 2023. Well, that's 2022, 2023, because Austrian years work differently, which is extremely confusing. Why did I do that? Now, you can see like the free cash flow is negative, but that's according to analyst predictions. I'm not sure I fully agree with that the cash flow is going to be negative. So they said they would do an investment of 1.25 billion. And when we look here, this is their statement of the earnings of the last quarter of last year. So what do we have? We have a capex expenditure of 314 million euros in the last year. We also have cash flow from operating activities is still 117. So that means without the capex they would be close to 420 million. Now they're probably expecting to have somewhat lesser profit, but still that would mean they would have a cash flow of 1.6 billion. Capex 1.25 is 700. They would have to lose their profit for an additional almost 1 billion. They would I mean, they would have to lose quite a lot of revenue there. So I'm not sure I fully agree with the analysts, but time will show. And we always make our calculations based on what we see. But look at just this quarter. Look at just this quarter, guys. So we're seeing 431 free cash flow if there would be no capex. And look at how big this company is, 1.2 billion. So that means if they wouldn't have those expenditures, in only 3 quarters they could buy out the entire company. Like this is crazy. This one big profit making machine. Their margins have actually been going up. How many companies have had their margins to improve. So I think at some point I saw they were at 10%. So they're slightly going up. Well, could be wrong. I have to double check that later. But I do want to open my Excel again, where I had my calculation. I already showed this Excel. I did had a small miscalculation here in the long-term free cash flow, especially from 2027, so I had to redo that. But you can see, even with the negative free cash flow of analysts, I would expect that they would get back in 2027 to the current free cash flow. I mean, it would be hard to imagine that's even just the current free cash flow, guys. And that would be including a lot of extra factories they just built, because they're building factories. So, and then depending on the growth, 3, 9 and 15, I would have a price target on the low of 44, medium 57 and a high of 74. I think right now they're around 30, 32. So you can see there's quite a major upside there. And I don't see much stocks in this market that have this upside. If I saw them, they would be in my portfolio. And this is the second largest stock I have in my portfolio, outside the ETFs, of course. I always also show my watch list, guys, so I wanted to not withhold this from you this time. So I have a few. I have YIT, so they're doing construction in Central and Scandinavian, Central Europe, North Europe, Scandinavia. Energy, delivering energy services actually to, let's say, gas companies and such. And so they're a little bit behind on the energy trend. So if you missed like the energy trend, that could be a play to still get a hop on the bandwagon. Alchemy, I have to look into deeper, not sure where they're valued, so undervalued. I think might have something to do with the dropping of the gas price. And this was on my watch list already for a long time, and I think I put it on when it was around $10. You can see it jumped 30-40% since then. So yeah, I didn't buy it then, and now I missed the run up. So I don't know if I'm going to keep it there or not. We'll see. A few others have also jumped, like TBC Bank had been on there, doubled in value since I put it on. And Leonardo also had, I don't know, 30% increase since I put it on my watch list. So yeah, looks like in October was really like the down point for a lot of stocks. And that was the time to buy, guys. And you might have another opportunity, you might not. So just buy and hold, buy and hold, buy and hold, and eventually the market will go up. Guys, thank you all for watching. If you like these videos, if you want to see more of my dividend portfolio and follow the updates, please like, please subscribe, and see you next time.